markets to begin with. Karthik Malhotra, Amit Ranjan sitting with me in the newsroom as usual. Gentlemen, appreciate you.
Nifty is down about 110 points already since yesterday, which is down about 0.5% or so. Exactly the same story on the Sensex also. Sensex is down. It started about 700 points down. It's down about 436 points right now, trading at just about 67,000 levels. In fact, it's down almost 500 points now, trading at just about 67,000 levels. We were hoping for Sensex to touch the 68,000 and the Nifty to touch the 20,000 figure today. Infosys and the entire IT pack has pretty much, shunted those dreams right now, at least.
And Infi results came in late last evening, just before we could wrap up our bulletin. Numbers were looking fine, but it's the guidance, I'm assuming, that is problematic for the year to come.
Yeah, totally, Shweta. So I think numbers were in line with the sequential growth expected, which wasn't great. You were expecting a 0.8% sequential growth in Infosys. It delivered almost a 1% growth. So sequentially, revenues were not a problem. Neither were margins a problem. But I think the jitteriness of the whole situation comes from the fact that a sharp decline in guidance. Remember, in the month of April, Salil Parekh, the CEO of Infosys, had given a guidance of 4 to 7% estimated growth. And even that was bad news because IT sector has been pretty much the bellwether of Indian stocks. Infosys has been the bellwether of IT pack as a whole. It's the second largest IT company in India. And it was expected to grow double digits, and the services sector was supposed to deliver growth for Indian economy, for the GDP, and of course for the markets as well. But that mood got dampened when yesterday's revised guidance was halved pretty much. Remember, the original guidance was 4 to 7%. It was halved to 1 to 3.5%. So guidance was practically halved, and that resulted, of course, this morning with the Infosys stock taking a massive beating. It started about 7% down, the Infosys stock, and let me just try and see where it is trading right now. Yeah, it's still down about 7%, down 100 points, trading at about 1343 right now, down 7.3%. So Infosys not looking good. Overall, the IT pack not in a great shape right now as we speak.
And Infosys pulling down the entire market is what we're picking up, down by about 7.3% this morning. Another important story that we were tracking is by the way of HUL. The Fmcg major also reported numbers that are in line with expectations.
So, expectations were higher, to be honest. But I feel we know what has happened with inflation, and we've seen consumer demand not really, picked up to a level that we thought it should pick up with inflation coming down. That never happened. So my expectation from the HUL stock was pretty much in line with what has been delivered. In fact, its net profit and revenue both have grown. Of course, they haven't grown at a clip at which the market would have wanted it to grow. And that also has resulted in the HUL stock also taking a bit of a beating this morning. Its HUL right now is trading
down
about 1%, 1.3% down, down at about 2,668 levels. I think this is a natural phenomena. Results not in line with street expectations is bound to play some sort of a short-term havoc with the stock price. So we've seen profit booking happening because remember, both these results, Infosys and HUL, were announced after markets had closed yesterday. And not in line with expectations. After market closure, there would have been some sell-off which reflected this morning. A major sell-off on the IT side, not a major sell-off in HUL, down about 1.6% right now. But I think the IT story, of course, is also taking cues from what is happening in the US. And that is in general impacting Asian markets as well and India. So overall, the sentiment of IT stocks in the US have also been dampened. Now, whether you talk about Netflix, whether you talk about Tesla, even these emerging sectors, emerging technology players, not the traditional IT players, their results, despite, let's say, Tesla also seeing a 20% growth in revenue and a 20% growth in profits in absolute numbers, so its margins declined. So that's not something that that investors are taking in their stride very well. So I think all of that playing out globally, at Asia and within India, our own IT stocks, not doing well. And add to that what happened with Reliance yesterday. So I think it was a fairly interesting trading session and post trade as well. So the price discovery of Jio Financial Services happened.
Absolutely.
And on Reliance specifically, the new price discovery for Reliance after the demerged entity saw a reduction in prices. So on Wednesday, Reliance Industries was trading at its lifetime high of over 2,800 levels. And that saw a correction of about 250 points by the time the price discovery of JFS happened, which is also an interesting process simply because this was a pre-trade price discovery done for the first time in India, where traders were allowed to discover the price of JFS for a 1 hour window without really actual trades being made and actual exchange of shares happening. So the price discovery for Jio Financial Services came in at 261.85, but we saw profit booking happen in Reliance Industries as well. So Reliance Industries this morning was also down. Let's see where it is down. Yeah, Reliance Industries is also down about 1.3% or so, trading right now at 2,584 levels, which is well below its lifetime high, which had breached 2,800. But of course, this comes not on account of of financials, which could be another story, which we'll come to, but primarily on account of price discovery for JFS and Reliance Industries results expected later today for Q1. So we've seen lifetime high of Wednesday, we've seen price discovery of JFS. I think we are seeing profit booking on Reliance right now.
All right.
So there is profit booking and in anticipation of results, giving the overall trend in the markets on stocks like IT sector stocks as well as even HUL not performing in line with expectations. I think we are seeing some profit booking on Reliance Industries as well.
And for those who did manage to invest in RIL stocks as of Wednesday, have 100% gains on the stocks of Jio Financial Services on the account of the prices that have come in at 261 rupees a stock, which is more than what was expected. Some expectation was within the band of 160 to 190 rupees.
That's right. So 100% perhaps not directly, because there's also reduction in the value of the Reliance stock owned. So if the Reliance share price has fallen from 2,850 odd levels to 2,580 levels right now, we are talking about a 300 reduction this morning on profit booking. We are talking about a 300 rupee reduction on the actual band of Reliance shares, and we are talking about a gain of 261. So the offset as of this morning is a negative of about 40.
Right.
But then the trades are going to happen even in JFS, which may be a different story altogether.
So it was listed in the bourses. The window was open for 1 hour.
So the price discovery happened. The listing hasn't happened. So I think the listing date should be announced at Reliance's quarterly earnings meeting today.
Okay. But you'd say it was included in the indices.
It was included in the pre-trade only for price discovery, and that's the first time that a price discovery like this happened. That because it's not technically an IPO yet, right? It would become maybe an FPO at some point, because the original initial public shareholding would come by way of existing shareholders of Reliance. So it's not technically an IPO, it's a demerger. The price discovery happened by keeping the pre-trade open for a window of 1 hour to see how much buying and selling will happen between Reliance Industries and Jio Financial Services to arrive at a price point on which the stock will eventually get listed. And that listing date hopefully should be announced in the quarterly earnings today.
And that's important, I think. News trend to look out for. Reliance would be coming out with its quarterly results today. Stock is down about 1.5% this morning. I think maybe some jitters in the market would be swayed once the results come out, if they are in favor.
I mean, Reliance has a habit of positively surprising its shareholders. If not by way of numbers every time, then definitely by way of some massive announcements.
Absolutely.
Right. So I think, and this whole timing of JFS also demerge and a greater price discovery than expected happening just a day before the results, it means overall Reliance knows how to get the sentiment and how to get a favorable sentiment going for the markets. So I'm hoping that what we are seeing on Reliance today, the decline in the share price right now is on account of possibly the demerger and some sort of allay of fears and hence profit booking. But I think Reliance should surprise its investors with better news.
So that, of course, is the big result that we'll be tracking this morning. All the other results that are coming out, I also want to quickly, bring our viewers up to date with all the other major earnings earnings that we're tracking this afternoon. DLF, Ultratech Cement, JSW Steel, Paytm, Vedanta, Ashok Leyland, of course, all those companies will be announcing
and
their
Indiamart,
quarter.
which again Indiamart has been a very, very promising story. In fact, I've been personally tracking that journey for the last 15 years or so, ever since it was a startup, not a listed entity, to eventually its listing. And it became, the first B2B marketplace as we know it now. It was a marketplace to connect buyers and sellers, but not the end sellers, but the whole B2B community.
B2B, yes.
So vendors and manufacturers got to meet digitally at Indiamart, and it had, of course, a robust database, great equation with vendors across the board, and its results also came out today. And
they've come out
beaten street expectations. In fact, the EPS earnings per share has beaten estimates by about 18% or so. That's the earning call right now. Stock price trading at about 3,085 rupees, up about 6.37% this morning. So Indiamart, anybody who had invested in Indiamart and stayed invested, I think excellent news.
Absolutely. Good news for investors of Indiamart. We will, of course, keep tracking all those results when they come out this afternoon or today at any point of time. But shifting focus to another important stock story that we're tracking is by the way of ITC. ITC surprisingly becomes the 7th company in India to cross market cap of 6 trillion rupees. Once a laggard, now a very prominent player in the FMCG business.
Sure, Shweta. So, again, ITC is also a very interesting story. And if you look at how the stock has moved, it's moved from about 89 rupees in 2009 and taking a 15-year period. In 2009, it was trading at about 90 rupees a piece or so, 89 rupees. And yesterday, the stock was trading, it closed at 492 rupees. So that is a 5x jump for anybody who had invested in ITC and stayed invested in ITC for 15 years would have created wealth 5 times over.
5 times, absolutely.
Right. So that's a massive jump. Now ITC also in between, if you remember in the year 2020, 2021 was completely range bound. And that was the period in which whatever you did, the stock was not moving beyond its range of about 300 rupees or so. This, despite the stock seeing, let's say, peaks of 342 in 2017, the 2020-2021 period saw ITC being completely range bound to a level of about 300 or so. And this became a subject of memes across the board, that you had memes being made on the ITC stock, which were difficult for a non-investor to understand. So I would at times call up my analyst friends and try and understand from them, hey, what is this meme? What is it trying to tell me about ITC? And that's when I realized that it's a stock which is completely range bound. And there was no movement on that stock despite whatever was happening, including COVID, right, where we saw that the only thing moving was FMCG. The only sector that was delivering was consumer products, food, beverages. And ITC has been a very centralized player in the FMCG, in the food business, and food was doing extremely well during the COVID period. But ITC stock refused to budge, and it stayed completely range bound. And that's when I think there were talks that Sanjeev Puri, after YC Deveshwar, the legendary YC Deveshwar, Sanjeev Puri has not been able to steer the company into new territories, hasn't been able to add the kind of diversification that happened in a 10-year, 15-year prior period. But I think all those fears have now come to rest over the last 2 years, and we've seen new product launches from ITC. We have seen the food business expand. We've seen, of course, the cigarettes business expand, and overall inflation. So inflation in food, inflationary impact on consumer products as a whole has led to higher revenue directly for these companies. And that has resulted, again, this diversification and increased prices has swelled up the top line and the bottom line for the company, that right now we are looking at a market cap of about 6,12,788 crores. This, of course, is as of yesterday. Let's try and bring up how ITC is trading this morning. And yeah, ITC is one of the very few stocks which is in the green, up about 1%. So I think that valuation of 6.12 trillion would have increased by the second decimal point a little more this morning.
Absolutely. And I'm looking at the business portfolio of ITC, a very diverse portfolio, but one portfolio that stands out is the tobacco business, which is where ITC continues to hold a very dominant position and also drives most of its profit from its tobacco portfolio.
Yeah.
I want to understand, what is the division like between FMCG and tobacco? Which of them is the growth driving?
So I think I don't have numbers handy right now as I speak, but I think ITC draws a chunk of its revenue, its profitability, as well as ire from the tobacco business. So it's a business that has been ridiculed. It's a business that has been overtly priced, overpriced, heavily taxed, and yet it's a business that ITC has not been able to exit, and I don't think the numbers will permit ITC to exit the cigarette business or the tobacco business as a whole. So in terms of market division between these multiple businesses, I don't have those numbers right now, but it's fair to assume that if the tobacco business was to be demerged, or if the tobacco business was to be taken away from ITC, then ITC would perhaps not be in the Sensex 30 pack. It would not be among the 30 most valuable companies.
I'm looking at data that we have as of 3rd of February. ITC's revenue from cigarette business rose 16.7% from a year ago period to 7,288 crore. So a substantial chunk of money that ITC earns through its cigarette business, and cigarette volumes is growing at a rate of 15% or more as of February of this year. Other businesses, of course, FMCG, where a growth of 18.3% was posted, and I'm talking about these numbers are coming in as of my assumption is this would be the third quarter of financial year 23, where FMCG sector clocked a growth of 18.3% rise in revenues to the tune of 4,841 crore rupees.
And then, of course, you've got the hotels.
And the hotels. And hotels is a massive business
ITC
for FMCG.
has, of course. So I think I would assume that its food business, agri business, as well as hotels would command a lion's chunk. And the next obvious bet, I think, is going to be tobacco.
Tobacco. Whether you like it or not, whether people like it or not, ITC continues to grow, and on the back of course, its growth in FMCG, tobacco, and the hotel business. Moving on to another important story that we're tracking, and that is come by the way of India's dominance in the market of rice, a staple for many in north of India, perhaps even south of India, overall throughout the country for that matter. India exports, and the total exports in the world, India accounts for 60% of that share when it comes to rice. But given that the monsoon has wreaked havoc across north of India, Government of India is now taking measures to to ensure at least momentarily that exports are not to the tune of what they were about a month ago, so that the needs of Indians is catered to first before farmers start exporting them outside. What are the details we have, Karthik?
So exactly, Shweta. I think the move to ban the export of white non-basmati rice outside the shores of India has been taken by the Government of India in line with the exports of grains and cereal that we had seen even earlier. And this trend started in the wake of COVID, followed by the Russia-Ukraine war, where essential item exports outside of India were banned, and this was banned primarily to cater to domestic demand, number one, and then inflationary pressure on cereal. So remember, your core inflation, which does not account for for fuel and agri products, food and fuel, basically the core inflation not accounting for those, has been under control, whereas your headline inflation, when you take fuel and food into account, has not been able to we haven't been able to hem it in. So I think it's important for India right now, in its own domestic interest, in its own electoral interest, to try and tame down inflation and try and ensure that there is some sort of a price stability when it comes to essentials like rice, like grain, like cereal, like wheat. And these exports, sporadically, we keep changing the threshold for export, we keep changing the percentages of export, and right now a complete ban is particularly to hem in this inflation that we are seeing in food. Now, you're right, 60% of the world's rice basket.
Actually, it's 40. I stand corrected. India accounts for 40% of the global rice exports.
Okay, so yeah, so I think 40% is, so I mean, we are a dominant player when it comes to the overall, but even I remember reading the number 60. I think we'll tally that and we'll mention this in our notes. But whatever, I think, even if you were to average it out, you're talking about half of the world's, rice basket actually comes from India, and the rest of it actually also comes from the subcontinent. So you've got Nepal, you've got Bangladesh, you've got China, and go a little on the eastern side on the same equator line, you've got Iran. And then you've got, some pockets of Africa contributing to overall rice production and rice export. Now, what this means for India, we've discussed that, we will be able to hopefully hem in food inflation. What this means for the rest of the world is increased disruption in global supply chains of food items. It means greater inflationary risk for the rest of the world when it comes to headline inflation, which includes food as a key component. And therein some impact which could indirectly accrue back to India. But I think right now priority number one for the government is to bring down inflation. And we've seen that monetary policy has been tightened as far as possible. Now it's time to work on some fiscal measures, and this becomes one of the fiscal measures that the government is taking to ensure that the import-export deficit, also on account of, again, our dependence on imported fuel, imported crude, has gone up about 82% or so. So overall, to balance this deficit in terms of current account as well as the fiscal deficit, we are dependent on on fuel to be imported. And while rice would have added the export revenue in dollar terms, right now I think the government is playing it safe by ensuring that there is inflation within India under check right now before we open up the taps for rice export to the world.
And as you rightly pointed out, we are a dominant player in the export business. Concerns, of course, being raised across the board that rice prices, which are already a decade high, could be further hiked after this announcement and after this measure, which would invariably hurt not just India in the long run, but in the short run it's going to hurt people all across the world because they are heavily dependent on Indian rice.
You're right, Shweta. And look at, let's say, so I don't want to comment only on rice. If I were to look at the entire, grains food basket, which includes rice, which includes pulses, which includes wheat, you've seen double-digit inflation. So, and that's what I'm talking about, headline inflation, not core inflation. So taking these food items, which are extremely volatile, food and fuel being extremely volatile, price sensitive entities. If you look at grains as a whole, you've seen a double-digit inflation coming, squarely around 11.5, 12% on an average. Since October last year, in fact, we've been seeing double-digit inflation month on month on food. And that, of course, has to be brought down at least to single digits. So while it will not make, food items any cheaper, while this export ban is not going to reduce prices immediately, at least it's going to be able to contain at what rate they get hiked. So if it's in line with headline inflation, if it is in line with core inflation, if it is in line with or a little better than the overall inflationary pressure, it is better for Indian consumers and it is a lesser sort of outgo on the monthly food bill. And then obviously we have got a large section of middle class and below poverty line population which is dependent on these prices to be contained. But yeah, you're right. Overall, global supply chains on food are going to get disrupted, and India being a dominant player there, I think there is going to be pressure for India to end this ban soon. But I think India will want to sustain it until we are sure that our prices have come down.
All right, and prices coming down in India would also invariably mean prices will go up across the world as India exports 40% of the world's rice needs. We will of course track the developments as far as the ban on non-basmati rice is concerned and its aftermath, but shifting focus now to another important story that we're tracking, and it's coming by the way of Japan. It appears, Amit, Japan is betting big on India. India steel production capabilities as well as the semiconductor facility that we've been eyeing. Japan says they're going to make investments.
Yes, and the investments are to the tune of 5 trillion yen in the steel sector. The Indian steel sector, which stands at 160 million tons right now, is expected to grow to 300 million tons by 2030. So that is in the steel sector. The other place where Japan is following America, Micron had said that they will be investing 2.75 billion in chip assembly, testing, marking and packaging in a packaging unit. Japan is now coming to India with a big investment, and their strengths are silicon manufacturing, ingot manufacturing, display and equipment manufacturing. Those are the things that Japan brings to the table. What does India bring to the table? Qualified design engineers in numbers north of 50,000. So that is what India brings to the table. So that's where the marriage will be. Additionally, Japanese companies will be able to avail of the 76,000 crore subsidy that Indian government puts into the semiconductor sector. And Japanese companies like Sony, Kioxia, NEC corporations are amongst the few that will benefit from this scheme with the collaboration that is happening in the chip manufacturing sector in India. So it was first assembly, testing, marking, packaging that came from Micron, and now the manufacturing side of display equipment, ingots, silicon wafers, that is coming from Japan. So it's going to be a complete rounded industry if it happens in the times to come.
Okay. Japan becomes the second Quad country after US to sign a pact with India to make semiconductors. Now, India is going all guns blazing, asking private sector to heavily invest, inking MOUs, partnerships. I think we don't want to be a laggard in chip making. We already are at this juncture, but we don't want to be a laggard for far too soon. And could this deal with Japan or MOU with Japan change our fortune, turn around our fortune anytime soon, Karthik? Or am I being too optimistic?
No, I think you're being cautiously optimistic.
Thanks for that.
I think, see, the Micron plant, which is primarily an assembly and packaging plant, is likely to be up and running by December this year, right? At least that is what the MOS for IT electronics, Mr. Rajiv Chandrasekhar, has gone on record to say that December 2024, sorry, not this year, December
next
2024, next year is when the Micron plant, which is primarily going to be an assembly plant, is going to be up and running. And we are hoping that there are going to be another 6 plants or so which are going to come into India. Their announcements should happen in a year or so, right? So within a year, we will have at least 6 more partners with signed agreements, with contracts in place, coming and investing in India. Now, what does Japan bring to the table? Of course, Amit told us it's design, but I think along with design, the focus that Japan has on manufacturing of silicon wafers, right? So it's silicon wafers. And these silicon wafers, of course, are the bedrock. They are pretty much, the base on which semiconductors are built. So it brings this to the table, and it brings display equipment and gases, right? Which is in line with what, let's say, Allied Industries, which was the other sort of big deal announced when Prime Minister Modi was in the US. Allied Industries is also in the display units and the gases business. So that is the second thing that Japan brings. But what we don't have access to still, I think, is gallium and germanium and germanium. I'm sorry, and I think that is where China continues to hold on to its territory and its precious metals in that sense. So I think that is still going to be a tough fight. So India will have to very clearly understand that what does make in India semiconductors really entail? Is it going to be assembly of semiconductors?
Or just design?
Is it going to be design of semiconductors? Is it going to be a complete technology transfer where these 50,000 upwards of skilled engineers in India will actually be able to improve upon, build upon? And therein also lies another story, Shweta, about what are the specifications of the semiconductors that India is going to make. So are we going to be able to build 28 nm nanometer semiconductors already? It seems that this Japan pact is going to enable India to build the 28 nm microchips.
They are concentrating on that.
Right. But I think right now India is still hoping, at least with Foxconn Vedanta deal also falling through, both players looking for technology partners to establish, their own manufacturing units in India. I think these Japanese companies are likely to partner with Vedanta at one end, with Foxconn at one end, with Micron at another end when it puts its own assembly plant in India. But I think the game is still going to be about agility. The game is going to be about swiftness, because the rate at which semiconductors are getting developed, their designs are undergoing change, their microns are reducing in nanometers every day, because the form factor is changing. You want smaller devices, you want more portable stuff, you want lighter electronics. All of these eventually mean your semiconductors will have to keep shrinking and deliver more and more power. So it comes down to whether we will be first movers or innovators or early adopters in new technology, or whether our present laggard status will help us develop mass scale products 40 nanometers and more, which may see a dwindling demand from the world going forward. So I think we'll have to balance this and get our expectations very squarely in place to understand where we want to head. Do we want to be innovators in the semiconductor business and become self-reliant, which in any case is going to be difficult because we don't have access to all the raw materials, or are we happy being a manufacturing, assembly line, packaging sort of a player where we still serve the rest of the world with whatever other technology players and other semiconductor experts from the world are coming and assembling in India? I think there is merit in exploring either of the two, but we should not fool ourselves to assume that we are going to overnight become semiconductor hotbeds for the world. I don't think that is going to happen.
Absolutely. It's an important bet, but where do you go from here into design or into making? I think that is something where India will have to thoughtfully and I'm sure this is happening thoughtfully, and India of course is looking at more and more partners, and Japan specifically. Yes, Amit.
What India is betting on is basically cost effectiveness for all these companies that are coming to it. I think that is where India will score, or will, so that can be
mass production essentially. What
but even of new technologies, even of even when it comes like Allied is even coming with research and development into India. So that is an up. I hope that happens.
My only fear is that if you end up repeating what China has done for the world, and China has done it very successfully, and now the world has seen that model. You don't want to be restricted to being an assembly line operation only, because tomorrow nothing stops even a country like Vietnam or Philippines to take over that business. Remember, their populations are growing almost at the same clip as India's. These are countries which want to immediately strengthen their positions in the Asian space, in the global space, and there is going to be so anything which is easy to do, which gives you a cost arbitrage by access to land and cheap labor, is easy to replicate for any developing country, right? And it's again going to be about speed. How quickly can you change policies, attract assembly lines to come set up shop, and there you go. You can start producing immediately. I think the real game changer is going to be in terms of innovation, which is where India needs to look at US and Japan and not China specifically as models to ape. That you're producing, you're designing and creating patented next generation stuff which is going to define technology of tomorrow,
so
rather than replicating what somebody can do at a price more expensive or cheaper than yours. That is where the game is going to change.
Right, you're innovating rather than replicating. India's semiconductor story and the strides that India continues to make, if at all, will have any long-term repercussions or not, we will bring you all those details. But another place where semiconductors would go in or would be the electric batteries, and India also continues to make strides as far as electric vehicles, electric batteries is concerned. We're now given to understand Ola Electric is looking at shoring up revenues to the point of $1.5 billion. And all of this comes on the back of the fact that there is less competition when two-wheeler, or as far as two-wheeler EV makers is concerned. Amit, there are 5 to 6 of them, prominent players, and Ola has a major share of the pie, not just the revenue pie, but the market share as far as electric two-wheelers is concerned.
So what they're eyeing, the revenue that they're eyeing, 1.5 billion, is a 4 times jump. And there is an IPO that is basically looking at generating another 700 million. Operating profits, they are looking at 220 million. So, and this predates the FAME cuts, subsidy. But yeah, it is basically going to become a single largest player in the markets, correct me if I'm wrong, in this space in the times to come.
No, I don't think you're wrong. I think you're absolutely bang on, because it already controls a third of the market. 32% market share is Ola Electric. But this market share, of course, comes on the back of players like TVS and Hero Electric suspending their operations momentarily because there is still confusion over the subsidy refund and whether they will actually have to refund subsidies upwards of 100 crore rupees or so on account of Hero Electric. But Ola Electric, I think, you know, the fun fact here, the interesting trend here, Amit, is that the parent company, which is Ola, is valued at what, $4.8 billion. You just did that story.
Devalued by Vanguard almost 37%.
Right. So present value stands at about 4.8 billion or so.
Yes.
Present day value of billion. Ola, the parent company, which
$4.8 billion.
$4.8 billion. Ola Electric
is 1.5 billion.
No, Ola Electric is $5 billion. Ola Electric is at $5 billion. So I think that is a very interesting fun fact that investors like SoftBank, Temasek, etc. are betting on the future of mobility, which happens to be by way of
HDFC and HDFC Bank repeating itself.
Exactly that, right?
So when your subsidiary becomes bigger than your parent company,
it swallows you up sometimes.
I think a great big bet from Ola to jump into the market, to jump into the fray when the market was hot and picking up, and it's only going to pick up from here on.
And when Ola Electric, Shweta, if you remember the first few e-scooters that came out, the amount of negative press it attracted by way of scooters catching fire because of battery explosions,
burning off,
showrooms coming down pretty much, you know, because one spark somewhere leading to a catastrophe in terms of all bikes parked there catching fire. But I think Ola Electric has very squarely been able to ride over those initial obstacles. And the next bet, I believe, for Ola Electric should be in the battery manufacturing space. And there have been some news reports, unconfirmed, that battery manufacturing is something that Ola Electric will look at seriously. And that completes the entire supply chain. Add to that the four-wheelers. Remember, we were speaking about it about a week ago or so. Yes, even Ola four-wheelers and Ola, not just electric two-wheeler scooters, but even motorcycles by as early as end of this year. So we are talking about four-wheelers, we are talking about electric motorcycles by end of this year. We are talking about an IPO in this financial year. We are talking about profitable revenue reaching $1.5 billion in this financial year. That likely to double in 2 years to about $3 billion. We are talking about an IPO, which we've spoken about $700 million of fundraise. Then we are talking about a four-wheeler by 2025.
So a complete portfolio, strong financials.
We are talking about an existing aggregator model of cabs running, which could eventually also turn electric, which could use these four-wheelers made by Ola, and then a battery manufacturing plant.
That completes the cycle.
That's 100% of the supply chain, and I think that is going to be one big story to write if that happens and when that happens.
But sounds very promising. Sounds very promising from the very start. The massive, I think, jump in revenues for Ola. The fact that it's completed a cycle, portfolio is likely to complete very soon with Ola jumping into fray with a four-wheeler, a motorcycle by the end of the year. I think it's a win-win situation for Ola if it's able to ride on those developments and sustain the momentum. But we're going to move on for now. Another important story that's coming in, and that is by the way of OTT wars. We continue to track OTT wars, war within themselves, war with outsiders. But let's talk about the war that is raging when it comes to acquiring content. People who watch BBC content in India will have a new location by the way of Amazon, which is now going to offer your great American shows, your I mean, all sorts of shows. I'm told, from the culinary shows to entertainment, children's entertainment to BBC dramas. So there's a new place for it in Amazon, India.
Yes. Now, this war, we spoke about something that happened few days ago when the war without, that the Disney Hotstar war with Google, basically to stabilize their pricing. And they had moved the Madras High Court, and we spoke about that. And the Madras High Court had directed Google to basically keep the pricing of the streaming platforms at a lower 4%. So they
the commission.
Commission. So Google wanted it at 15 to 30, and they were asked to keep it at 11 to 26. That was the war without. The war within the OTT platforms. First is, okay, BBC comedy, BBC crime dramas are coming to Amazon Prime.
The great, UK Bake Off.
Bake Off. We'll name the shows.
Okay.
Then HBO and Discovery had moved to Jio from Disney. Netflix, in a counter, has removed password sharing. So Netflix will not be offering the extra member option to India, Croatia, Kenya, and Indonesia. They had recently cut prices in these countries. Now let's talk about the subscriber base. Netflix in India has a subscriber base of 6 million. Amazon Prime is at 20 million. Disney plus Hotstar, despite everything happening, still has a subscriber base of 52.9 million in India, according to the March results. Earlier on, a few years ago, Netflix had reduced its service prices almost 60% in 2021. Now I'll tell you how this changed for right now, how it stands at Netflix. Netflix plan came down, mobile plan came down from 199 rupees to 149 rupees per month. The basic plan on one devices of Netflix came down from 499 to 199. Amazon and Disney offer 299 rupees plan per month to every. So Netflix is cheaper right now. The BBC shows coming onto Amazon will cost 599 per annum to whoever wants to basically take BBC Kids and BBC Player. Now coming to the shows that you had talked about, Strictly Come Dancing, the Great British Bake Off. I would personally recommend an old show like Inspector Lindley Mysteries for all those who are interested. It's a crime drama. Dial and Pasco, Spooks, Rebirths. So these are the gamut of bouquet of shows that Amazon Prime users can basically feast themselves with in the times to come. But the wars are hotting up. Okay. Everybody is doing what they can to get customers. Price cuts, one password, one person, all of that.
And from what I see, the numbers that were up on screen, it's Amazon Hotstar that has the most subscriber base. Disney Hotstar.
Despite all the problems.
Despite not so much as problems, but I think the war within all these OTT platforms, and it's only heating up as we discussed. And Netflix very recently, and this was as recent as yesterday, has now said you cannot share passwords.
Yes.
Which is a statement. And from what I'm looking on social media, it's drawing ire of people, because essentially, how do you understand what is a household if you can only share it within the household? People who share one Wi-Fi, people who are living in different locations, therefore cannot continue to share password. Sure. Is there a possibility that this could, I know that there is backlash, but what are we looking at expanding user base for Netflix? Because I don't know if Indians would likely pay as much as they were paying for one household.
This sort of a policy, it seems, already yielded them results worldwide. Like I said, the extra member option was not available was available to India, Croatia, Kenya, and Indonesia. Rest of the world, it was not available, and it basically yielded them results. So they are basically taking that learning to these countries. They had earlier on reduced prices, and that had given them a jump of almost 30% year on year. So Netflix is doing what it has to. It is lagging behind as far as subscriber base. It's only 6.
Very surprising.
It's only 6 million. Amazon is almost more than 3 times at 20 million. Disney is 50, north of 50.
Netflix is at the bottom of the chart when it comes to subscriber base in India.
Yeah. So, and then there is a big challenger in Jio, which they are a sort of a
hasn't taken off just as yet. I am assuming hasn't taken off as it expected to just as yet, but I'm sure they'll acquire more content, they'll acquire more customer base.
And going by what Reliance does and what terminology, they are a sort of a scorched earth sort of player in whichever industry they come in in a big way.
Big way. Mm-hmm.
So telecom is one example.
All right.
So yeah, Karthik.
All right. I think, I don't know if Karthik is a great watcher of BBC shows and dramas, but if you are...
I recommend.
Yeah, if you are, I think it's good news. You don't have to watch pirated shows anymore, Karthik.
Sure. Well, I'm seeing this whole story a little differently, Shweta, and I think the whole story is going to eventually bottom out to ARPU, average revenue per user. And if you were to look at this chart, I think the top one, Disney plus Hotstar, is going to soon be history. So
really?
We know what is happening. Yeah,
okay.
We know what is happening with Disney, right? Bob Iger took over again as CEO post-retirement last year, and the mess that he finds himself in globally, it's impossible almost to tide out of it.
And Disney Hotstar is up for sale.
And Hotstar, so Star, which was owned by Fox, 21st Century Fox, is now up for sale again. If you look specifically at India, Disney plus Hotstar has an ARPU of just about $0.6 per user, right? Which is what, about $50 or so? 50 rupees per user is the average revenue per user when you talk about Disney plus Hotstar in India. That is about a tenth of what Disney Plus, which is without Hotstar globally, what Disney Plus commands from its users anywhere else in the world. And even then, it continues to make losses. 7,000 people fired, movie production business yet to take off yet again. It became a distribution company under the other Bob. Prior to Bob Iger's return. Bob Chapek, I think is the name, if not mistaken. And overall, I see Reliance Jio being the dominant player even in the OTT business. Jio Cinema gave us FIFA World Cup for free, gave us IPL for free, has snatched away literally the HBO content from Disney plus Hotstar onto its table. And I'm talking about the likes of Game of Thrones and House of Dragon and Succession and what have you. So it's taken all of that into its fold at a very competitive price. And let's see what else is going to take on, because a major chunk of expenses for Star as a network in India was cricket rights, 40,000 crore rupees and upwards taken, but it didn't have a digital outlet for it, and Jio has come and taken it up. So who's going to buy Star is the next big question. Who's going to buy the whole Star business in India? Is it going to be Jio, which is going to make Viacom 18, Voot, that entire entertainment pack a behemoth impossible to compete with? If that happens, everybody else here is history, right? In India, at least. Is it going to be maybe Tata? Okay. There are chances that Tata.
Gentlemen, I would love to take this conversation forward, but I'm really short of time. We don't know who's going to be. Absolutely, let's continue this in the evening. Absolutely, we will bring you more on this discussion, particularly at 4 p.m. in the evening. Thanks very much for watching.
BrahMos, stealthy, lethal, precise. It flies at 3 times the speed of sound and cuts through a warship like a hot knife through butter. China's navy has threatened its neighbors, and they are turning to the BrahMos for protection. The warship killer. This and more streaming on world's first news OTT, News 9 Plus. Download now.
Pakistan is actually genociding Baloch people. So being Baloch is a crime. If you are a Baloch, it means in the eyes of Pakistan, you don't have any right to live.
The Chinese and Pakistanis are colonizing the Baloch and exploiting their resources.
The Baloch armed struggle will continue unless China withdraws, the Pakistan military withdraws from Balochistan, and give Baloch complete authority to decide for themselves.
The Baloch feel that if they don't act now, they will become marginalized.
What lies ahead for Balochistan?
Balochistan, Bangladesh 2.0, streaming now.
At least 15 people have died and many are feared to be trapped after a landslide occurred in Raigad district of Maharashtra.
45 से 47 घर है, उसमें से 15 से 17 घर जो है मलबे के नीचे आए हैं और अब तक 4 कैजुअल्टी है और बाकी लोगों को बचाव कार्य बचाने का काम शुरू है। एनडीआरएफ है, एसडीआरएफ के, टीडीआरएफ के लोग हैं और जो लोकल रेस्क्यू टीम है वो भी